Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Actually, quite windy Lauderdale by the Sea. It looks to me like you got a couple kite surfers out here who are struggling with their kites. I think one guy actually got dragged onto the beach, but I'm not quite sure what's going on here. Well, this kind of explains what's going on in the markets too. We're not quite sure what's going on, but we are. Trust me on this. And seems like the dip before the storm is what we're seeing here, especially on gold. Not so much on silver. The strength of silver has done really quite well, and actually, it's the strength of silver that's tightened up that gold to silver ratio. With gold dropping like it has, and silver kind of maintaining at that $25, that mid-20 level. We're back into our average ratio that we've been in for the last few decades, which I believe is close to that 65 to 1 ratio or something, 68 to 1. Sorry, I didn't do the math. I did, but I already forgot what it was. But right in that range. So I believe we are in the dip before the storm, so to speak. And keep calm and love gold, folks, because it's a great place to be. And again, with these lower prices the way they are, and I'll explain why I think the prices are a little bit lower, besides the monkey hammering that we see that goes on normally in all markets, not just gold and silver markets. But of course, we know how that works. Just keep calm, love gold, and keep buying, as I said right here. And I always say, buy the friggin' dips. So, and if you can't buy the dips, just kind of wait this out. It's temporary, and don't get too upset about it unless you were forced to sell, and then you're kind of in a sucky situation. I've got some too much inventory myself, and I'm forced to sell at these lower prices right here. But if you're not forced to sell cheap, don't even bother. Just kind of wait this things out. It's temporary, and you don't have nothing to worry about. In fact. What we've got going on right now is the tail is wagging the dog. So the paper prices are kind of the tail, and physical is the dog. And that's been happening for a long time already anyway, that the paper prices have been dictating what physical prices are. But I think we're going to see a reversal in that. Meanwhile, things are really effed up in the paper markets. The physical market has completely disconnected from the paper market, completely. The ETF prices, the spot prices you see for COMEX, the London spot prices are completely screwed up. They don't even reflect the price of real metal. So we have actually decoupled. The price of real gold, the price of physical gold, has in fact, decoupled from the price of paper gold. And that's what you're seeing right now, folks. It's nothing to do with premiums. It has nothing to do with greedy dealers, which is, that's not even close. It has nothing to do with anything else but the fact that the paper markets have just disconnected completely. But, we've got to use some kind of process to figure out what the paper prices are. And how do we know that paper prices have disconnected completely from real gold? The price of real gold is because look at the product prices out here. Now this is APMEX. I like APMEX, but again, as I always say, I can always beat APMEX prices, but I don't sell online, so that's not helpful for you people that don't live around here. But my suggestion is buy local if you can, keep the money local. I'm not going to go into a long spiel about that. If you watch my shows, you know I say it all the time. But let's take a look at APMEX prices here. They're one of the more competitive people online. I think it's SD, JM, and APMEX are the top three from what I know. As far as online sellers. Again, I recommend you buy local, keep the money local, it's better for the economy. But if you have to buy online, these guys are not awful. But look at the prices they're getting. And again, this is not greedy APMEX getting $18.85. APMEX is having to pay real money to get this product, and it's not easy to get right now. You can tell that by pre-sale. They don't have the product. They're putting orders for the product, and there's people willing to take orders for the product, but the premium that they're paying is so much higher. And why is that? Is because the tail is no longer wagging the dog. The dog is actually wagging the tail a little bit. Well, maybe not so much, but the dog is disconnected from his tail. And right now, the dog is getting much higher prices than what you're seeing on paper prices, the paper prices, or the spot prices that we see from New York and London and other places. So, what does this mean? Well, really what it means is it's probably a good thing in a way, because it's finally showing us that there is a disconnect between the two, and that real gold, the price of or owning real gold is more expensive than owning a piece of paper. And I'm actually going to do a little video this week, hopefully, maybe for the weekend, explaining what you actually own when you own a paper contract or an ETF versus what you own when you own a piece of gold, a real piece of gold in your hand, not having someone someone else hold it for you. So we definitely have a huge disconnect here, folks. I mean, look, spot prices are just a tad below 17 when I last looked. It was 1690, 1688 and change. And that's the paper price, the COMEX price, the New York price, the London price, the ETF price. That is paper prices. However, when you go to look for the real product itself, the best deals out there right now are bars. I mean, I think the Eagles are popular, and that's why they're bringing the additional premium more than what the bars are. But let's just use bars, because bars have typically cost me anywhere from as low as $6 over spot, and as high, well, I won't say as high, because right now it's the highest it's ever been is what a bar cost me. But average, I would say probably $12 to $18. Let's say $18 has been the average price for the last decade on what a replacement cost for most good quality gold bars like Perths and Valcombis and stuff have cost me as a dealer. Right now they're costing me at least 40 to 45 bucks over in that range on a wholesale level. Now I might be able to find them cheaper in the aftermarket and other smaller dealers or other dealers that are selling to me or that, but generally speaking, they're up double. So the price of the product is really showing you what the real gold prices are. So if we use on a pre-sale, you're figuring that Perth gold mint bars are running $17.85. Figure dealer cost on that's about 45 bucks less than that, or so, 40 or 45, and that puts it around 1740. Puts gold at 1740, which is still higher than the paper price they're showing at 1690 right now, at least by 50 or 60 bucks. But the real monkey hammering in the paper markets is not gold, it's silver. But surprisingly, silver is doing very well. It's holding its own. I'm very, very impressed with what silver is doing right now. Let's take a look, though. Again, silver has disconnected me because spot silver right now is, what, 25 and change? It's, again, it's holding in this mid-20s. So I think silver's been performing much better. And that has a lot to do with the, I don't want to say the word silver squeeze, but the people buying physical silver, it's been happening for over a year now. A lot of people say, well, it's at the silver squeeze the guys started. No, the silver squeeze started long before this. The silver squeeze started before the virus. So don't let anybody tell you any bullshit other than that. The silver squeeze started before the virus, which with people that understand the silver markets and physical silver buyers, and people that were anticipating a bad economy. So that's what really created the silver squeeze and the gold squeeze, besides the virus shutting down mints and the shutting down mines and the availability of product, which has only exacerbated the problem even more. Gold prices and silver prices should be far higher than they are, but the reason they're not is because of paper. Again, the case of the tail right here, which is the paper. That's the issue you've got going on right now. But I've been in this game for a long time, and it'll blow by fairly quickly. Something's going to happen here where the paper prices are going to have to catch up with physical prices at some point. Otherwise, the whole system's just going to break down. And that's bad for paper. It's good for gold, though. We're going to probably we may even end up coming up with a new spot price for physical versus the paper gold. So let's see how that happens. Some smart people might get together and come up with a formula, kind of like with my little formula that I did using gold bars as an example, what they cost me in the past. I'm calling gold at least, let me think here, real quick, higher than it is. One sec. I'm calling gold 16, 18, 20. 25. I'm calling gold at least $25 higher than it is right now, and silver, I am calling silver at $25 higher than the paper price that we're seeing, at least that much. Let me take a look here at silver coins. Silver's products are just crazy, just crazy. Again, this is AppMex. They're just one of the big sellers online. I can beat their prices. This is why I don't mind showing them to you. They're not bad people or anything, but I always recommend you buy local. But if you have to buy online, I guess, AppMex, JM, or SD is one of the guys you want to look at. There might be some others out there, but they're the biggies, and they seem to have a good reputation. Again, buy local. You can probably get it cheaper and keep the money local. Silver rounds, there we go. That's what I'm looking at. Silver rounds I'm going to use as an example. View all products in silver rounds. As low as pre-sale, $30.51. So silver, even though silver spot prices have steadied around that mid 20s. And I really honestly believe the reason silver hasn't been so monkey hammered because of the disparity here. Again, physical silver, people are buying it up. It's not been a lot of it on the market. I had a hard time filling a 5,000 ounce silver order before the virus last year, around the holiday time, before the holiday time. Yeah, 5,000 ounce order, it shouldn't be hard to fill, but I had a hard time filling it. And then we've had a hard time filling silver for the last year. So it wasn't just the silver squeeze. This has been going on for some time. The silver squeeze might have exasperated it, again, a little bit, created the market to bump up a little bit by a couple bucks, but and created more interest in silver even, which is even better. But look at the disparity in silver prices. These 1 ounce rounds right here, typically it costs me $1.35, $1.50 over spot on average over the last several years. Plus, on a wholesale level, readily available, it may be no more than $1.50 over, generally $1.65 at the highest, but on average, just call it $1.50. And see, what are they costing me now? They're costing me at least, and delivery is 3 weeks out, 2 to 3 weeks out on these, just like APMEX. See the pre-sale. These cost me spot plus. Again, I get them cheaper than this if I can go buy from smaller vendors, but from the major vendors, they're costing me spot plus. Give me 1 second. $2.50. So these are $2.50. Delivery is 3 to 5 weeks out. So where does that? It puts about $1.25 higher. So silver is holding at that $25 range, but it's probably really $26.50, $27 or more in reality, based on what it takes to get real silver, not the paper bullshit. Well, I'll move along from there because this is something we talk about all the time, and I don't want to make these shows 45 minutes. Last week, I got to apologize. I made some really long ones. I'm going to try to keep them a lot shorter. Just I don't know how to do that, but I'll do my best to try to make them a little shorter. Thought this was a really good article, why the gold price is sinking. Again, I'm not going to read the whole thing. That's why my little shows go on forever sometimes. I end up reading the whole article to you. But this gentleman nailed it exactly right. The rising 10-year Treasury interest rate is causing the gold price to decline, and that's exactly what it is. And we have talked about this on our show for a year. These rising interest rates and such are only temporary. The strength of the dollar is only temporary. And in fact, they're talking about having to cap it. The Fed doesn't want to heat up inflation too much. They're in big trouble, folks. So, this dollar strength that we're seeing that has caused the paper price of gold to drop is only temporary. Even this is only temporary. The gold price is inversely correlated to the real interest rate. Real interest rate is what you get paid on your 10-year treasuries versus what the real rate of inflation or dollar deflation is, however you want to look at it. And then the difference between that. The 10-year TIPS is a U.S. government bond that protects the owner from consumer price inflation. If the TIPS rate interest, for example, is 1% and the annual inflation is 3%, the owner of the bond receives 4%. 1% plus 3%. The owner of the bond is always protected against inflation. That's if they're calling the inflation correctly. Years ago, mortgages used to be part of the CPI, but mortgages are no longer part of the CPI. I just learned that recently. Rents are, and rents are much cheaper than mortgages. So you got to wonder, how fudged the CPI as well. So is that really a great indication? Are you making money? Probably not. I think the CPI is based on a lot of bullshit myself. In the chart below, you can see the correlation between gold price and the 10-year TIPS rate. Well, here you go. There's your correlation, and that's exactly what we're seeing right now, folks. I'm not going to go into the whole article. You can read it yourself, why the gold price is sinking, and that's not a negative thing. Again, and I put a caveat in here, why the paper gold price is sinking, not physical prices, why the paper gold price is sinking. And and even if treasuries, if they were truly, going to go up in value, it would hurt physical prices. I mean, if the interest rates were going to, or you would get more holding on to treasuries than this, and it was a better deal, people wouldn't be owning gold. But the problem right now is nobody trusts the Federal Reserve. Nobody trusts the government, and everybody knows that if the Fed raises interest rates too much, it'll bankrupt governments. It'll bankrupt the stock market. So, they're talking about capping it. Again, this gold price sinking because of treasuries is very temporary. Provides you to do what, folks? Provides you an opportunity to buy the dips before the storm. Buy the frickin' dip. And keep calm. If you don't have money to buy the dip right now, just keep calm and love your gold. That's my opinion. and I'm sticking with it. So why the gold price is sinking, where is that actually? The Gold Observer. I'm not even familiar with that, but good article by Jan. New win. Okay, I'm not even going to try, Jan. Sorry about that. Good article, though, sir. I did like it. Here's an article I thought, look, January 14th, 2008. It's by who? It's by my favorite telemarketers on TV, my gold guys, Rosalind Capel. Own gold? Yeah, I don't know if you've ever seen their ads and stuff like that. And I'm certain that I can beat their prices as well. But hey, I kind of like their little article that they posted here back in 2008. What happened to the gold price in 1980? In January 1980, gold hit a record of $850 US per ounce. After reaching those dizzying heights, it then plummeted down and remained steady in the $300 to $400 range. Now gold has broken through at 19. Okay, remember this is 2008. This is before the last bull market, which is kind of interesting because here I'm going to go down to the bottom. Remember, this was written in 2008. Many analyses are predicting further increases in gold. Of course, and if you remember, we went from that $800-900 level to what was the high in 2008? I think it was it well below 12. It was 1900 change. 1950, I think, was the high in 12. So this article was written before that high. Let's see, this is where those investors, but with gold currently undervalued and the prime economy is in what could be called a long-term unsteady footing, man, if they only knew how right they were back in 2008 on this, and that nothing got fixed, it's even worse. This guy would be really surprised. God, in fact, this guy's 10 years older. Let me take a look at him. Sorry about that. I didn't even think about that. More than 10 years, 12 years older. 13, 14 years. God, that's an old article. But sorry about that. But with gold currently undervalued and the prime economy is on what could be called a long-term unsteady footing, there's plenty of room for gold to continue steady rise. Some say over the $2,000 an ounce mark. Well, sir, you got that one right. And again, I didn't want to talk about an article written in 2008, but there were some key points in here that I liked that they brought up. Key dates in history, gold history. August 1971, the dollar took the dollar off the gold standard with some minor variations. This has been in place since the Bretton Woods Agreement in 1944, and again, we've talked about this 100 times, and fixed the conversion rate for 1 troy ounce of gold at $35. So we were basically taken off. That is when the first gold bull market started. In August 72, the United States devalued the dollar to $38 per ounce. That was the first evaluation after we went off the gold standard. And Nixon closed the gold window. In 73, most of the major countries adopted a floating exchange system. That's what we were going to, a full-blown fiat system. I think Nixon even said at the time, we're all Keynesians now, if you remember that. Then in May 1973, the United States devalued the dollar again to $42.22. I think at some point we just completely got off that standard. The United States doesn't even, I'm not even sure how the United States values their gold that they supposedly own in Fort Knox. And we'll save that for another day. January 1980, gold hits a record high of $850 an ounce. I was here. I actually worked for my father in 1977. I saw this gold market. My dad had a little 10 by 10 store at the time when he first started, and he had people lined up out the door. But again, I'll talk about that another time. $8.50 an ounce, high inflation because of strong oil prices. If you remember, that was during the oil crisis or shortly after, and the issues we were having with the Saudis. The Soviet intervention in Afghanistan. Oh, what a coincidence. We're still in Afghanistan. And the impact of the Iranian Revolution. Wow. Take a look at these things in 1980 that are still existing today and still causing issues with financial markets. But that's besides the point, which prompted investors to move into the metal. 99, gold fell to an all-time low of $251. I remember that. It sat there for a little while. 99, gold reached a 2-year high of 30.38 after an agreement by 15, I remember this too, 15 European central banks to limit gold sales. Central banks at the time started selling off gold and leasing their gold in larger quantities, and I guess they all made an agreement that they wouldn't do it because they were hurting each other, that they would stagger it or do it some other way. But meanwhile, a lot of them regretted selling their gold. Which country? Was it England or someone that sold off all their gold before this big rise right here? That's pretty sad anyway. So they regretted selling off their gold, a lot of the central banks. In fact, they started buying gold. A lot of these central banks that made the mistake of selling gold during the 90s. During February 2003, gold reached a 4.5-year high on safe haven buy on the run-up to the conflict with Iraq. So there's a boys. I'm going to make this article an hour long, so I don't want to do that. Again, remember this article was written in 2008, and here this is the bull market that they saw. They didn't even see the 12 market. They were in a bull market in 2008. Now gold, remember this was written in 2008, has breached $900, which was a high for then, and looks set to reach the magical 1,000. Think about this, folks. You know why I'm telling you to think about this? Because one day, look at this date, 2008. One day, the magical number is going to be $2,000 in our future, and $3,000. But look at this, 2008. This author right here was really wowed by the fact it had gone past 900, and looks like it's going to reach the magical level of $1,000 per ounce. Think about that for a moment. And then he goes into why gold. Again, good article for Rosen Capital. Got to admit, what was the guy? Oh, I hacked his name. Sorry about that. So I won't try again. But the analysis, I'm not going to go into analysis, but I'm going to do something that James Turk wrote in 2008. The gold shoulder glitter, he comments. Although gold's previous record high of 850 reached in January 1980 gets attention. Remember, this is written in 2007 or 2008. Rarely do people consider that a $1980 had substantially more purchasing power than $2007. You and I talk about that all the time. When I talk about 1980 gold prices being $850 an ounce, I really say it's about 10 times that amount, but adjusting for 27 years of inflation, it takes $2,208 to equal the purchasing power of $850 in January 1980. So James Turk back in 2007 had already done this math and figured at that time that dollar was worth about $2,200. He follows on with another useful measure to determine gold's relative value can be made by comparing gold to the Dow Jones Industrial Average. Now, I found this very interesting. Gold is overvalued when it only takes 1 ounce to buy the Dow Jones. For example, in the 1930s, 1 ounce of gold at $35 bought the Dow Jones, which I guess was $35 at the time. And it did so again in 1980 when an ounce of gold was worth $850. I guess the Dow was $850 at that time, and the Dow Jones was $800. Though this ratio has fallen from more than 40 ounces in 2000, it still takes, and now he's talking about 2000, it still takes 16 ounces to buy the Dow Jones, meaning that the gold continues to be relatively good value with the Dow Jones is relatively expensive. Think about the Dow where it's at right now. God, if you were to use the same formula, what price would gold be? My gosh, I don't want to think about it. So gold is still relatively undervalued or cheap, as it were. And again, I found this to be a good article. It's called Buy Gold. It's a 22-year 12-year-old article, but you can find another. What happened to the gold price in 1980? Interesting. Head and shoulders. I'm going to probably save this for a different point, but I got to looking at charts, and some of you chart guys that understand charts, you can talk about the head and the shoulder. And head and shoulders, what does head and shoulders patterns tell you? Well, head and shoulder patterns can tell you a couple different things. It can tell you that you're in for another bull market or you're in for a crash. And I was looking at the site, and again, I'm not going to go into detail because I don't know a lot about this. I'm going to study a little bit more, and I hope to get some comments from you guys below, which I'll answer later. But if you take a look at the chart here, I'm going to move this chart past. We're going to move it up here to 1980. There's the first bull market, and take a look. I've got the log scale here, and I'm showing recessions. Look at the recessions here, too, during these peaks. Oddly enough, there's just the opposite, but that's like a little mini recession. You've got a rise here and a rise here, but are we in that head and shoulders pattern right now with gold on the long term, or do I need to shorten up this chart? Because take a look at that. Boom, boom. But again, on a long-term level, it's even more interesting. Dun, dun, dun. Is that all the result of a fiat currency? Look, if you're to take a head and shoulders pattern since we got off the gold standard, look, boom, and there's maybe the head right there that's going to go higher, and then we're going to have shoulders over here. I don't know. I'm looking a little more into this. I'm not a chartist, but I'm trying to read more into charts. But it appears to be that it looks like a head and shoulders pattern to me, but I'm not sure which direction this pattern shows. But in my opinion, we're in a up market for sure. All right, I'm going to get on to the point where I answer the questions on Friday's videos. I'm going to do this as quick as I can because I got one more thing to show you, two more things after we're done here, and I can finish up this video. I'm going to go to the bottom, and Friday's video was Monkey Hammer Fridays, and we did see monkey hammering, and I think we're seeing it a little bit more today. But again, that's in the paper markets. As you know, the dog is no longer, or the tail's no longer wagging the dog. The dog has got his own prices, and that's why premiums seem so high. Nihan Young says, silver was $17 before the virus outbreak. It takes time to cool down. It is time to cool down. No, it wasn't Nihon. I'm sorry, Neil Young. I called you Neil Young. Nihon Young. Nihon, it was actually, I think last year before the virus, we were in our 20s already. It had made that move before that, but I got to take a look at the chart here. No less, a cool down. Nothing wrong with a cool down. Cool downs provide the opportunity to, again, buy the dips and whatever. But the cool down here seems to be a bit artificial to me. I'm not sure if you feel the same. If you listen to what I've talked about here for a little bit, maybe you will. Jay Gills, hey Brian, that's a great idea about sharing what you buy and sell certain items for at your shop. Gil, I didn't get a chance to talk about that today, but on Friday I talked about that I want to start telling you what I pay for products, which I think is pretty cool because, profit's not a dirty word. If I make money over what I pay, no one should be mad at me for that. So I'm going to go over what I pay typically for products as a dealer, and I'll do that sometime. Maybe it'll be a separate show. I don't know. But yeah, Gil, I'll get to that for sure. Carl Sieber says, I love the way you look at things. You and I see the same things. Keep up the great content. Well, a great mind like yours, Carl, I can understand why I might see same things kind of like you do, sir. So, hey, thanks a lot. The Silver Squeeze has been happening before the Silver Squeeze even, and we're going to keep on stacking. Beto, nice to see you again. How weird can APMEX make mistakes? Yeah, sure they can, but if they made a mistake, Beto, just give them a call and tell them the mistake they made, and I believe APMEX is a really good company as far as owning up to things, and they're not a shady company. They're a big online company. So, yeah, I think you should be able to get your order squared up if you give them a call. Brian, I see you tried to take my advice about buying gold and silver. You live out in the woods, and a little pawn shop that says they deal in gold and silver. Yeah, it's tough, Brian. That's the problem you're going to have. You may be one of those guys that, unless you drive 2 hours, you're not going to find a good local dealer. APMEX, SD, JM, I check and see who has the best prices out of those guys. May be your best bet, sir. But again, always check, see who's got the best price out of the big guys, because I notice that sometimes some are higher than others. But I believe you'll get your product, and you'll get a fair product. If you live near me, you would get it cheaper, and you would get better advice. But hey, listen, you are where you are. Again, I'd recommend, take a little farther drive than your local guy. Maybe it'll take an hour drive or so. But if you can keep that money, do it. Keep that money local, and even in your state at the very worst. I would try that, Brian. Hey, thanks for watching, Brian. I really appreciate it. Also, you said down here, I'm sure he's buying from gold from Steve's as well. No, that one, I know the pawn shop business. I know the pawn guys. Television and cops and a lot of people make them look really shady, but they're not. Pawn guys are really hard-working guys that charge way too much in interest. If there's any crime, it's the interest rate. Trust me, those guys are so regulated, and they don't want to touch anything stolen. That's how regulated they are, and most of them are honest guys. I'd say 99.9% of them are honest guys, and they wouldn't deal with stolen stuff knowingly. Well, let me move on to the next thing, because don't want to digress too much. David Barnett says, use the bear to obtain some plata pura onzas. Man, what's the bear, man, dude? I guess I don't know what a bear is. I was gonna say, hey, good on you, Dave, but I don't know what a bear is. I'm sorry, dude. Let me know, but I'm glad you bought some plata. Hey, nice, and thank you very much. I do know what that means, and thank you as well, sir. Shay Rice says, what you think about collectible silver like Fender 75th anniversary silver guitars? There's other guys out there that can answer. Prestia Precious Metals is one of my viewers and watchers and local customers here in town. Perhaps he can tell you on collectible stuff. But, I think you have to separate collectible from stacking, from silver and gold. You have two things here. You have your collectible value. I say do one or the other, and do it the best you can, one or the other. Don't try to mix the two. Either get a really collectible that has, real desirable interest down the road, supply and demand factors, and that usually means stuff that's been around and been collected for a long time. A lot of stuff comes and goes. A lot of stuff is fad-like. But if you enjoy collecting it, buy it. But for investment, I always say, if you want to collect something for investment, look for the hobbies and the things that have been around for a long time and they have a solid record, like art, coins, comic books, and those type of things. As far as collectible silver, I think collectible silver stuff is here to stay. I really do. There's so much guys out there that collecting it now. At some point, someone's going to write a book once the stuff starts getting old enough and start describing all these little guys or all these cool little collectible silver deals. Anyways, let me move on from there. There's Prestia Precious Metals right there. He's the guy to ask, Shay. So go to his site, give him ask on his comment section what he thinks. Or you can ask right here. He'll answer you. Steve Girardi says, I buy physical silver to hold. I will sell in 10 to 15 years. Steve, in 10 or 15 years, I don't think we're even going to believe we're gonna, you know how that article I just wrote that the guy was talking about the magical gold level of $2,000 or $1,000 back in 2008. He was like awed by the fact that gold could be $1,000 in 2008. I think at some point when we look back at what the price of gold and silver is right now, we're gonna go, oh my God, that was so cheap. And you can always say that. We're always going to say that with gold and silver. You're always going to look back 5 years, 10 years, and say, man, it was cheap then. Always. I worked Black Ops in Vietnam. What you hear may be a lie. What you can hold is real. Wow, pretty cool. Thanks for commenting, John. Thank you for your service as well. What you can hold is real. I got to agree with you 100% with that, John, and I'm sure your job taught you that as well. Steve up here again, great information. The biggest news for average Joe should be about the CFTC. People, the CFTC stands for Commodity Futures Trading Commission. The CFTC right now is doing an investigating into the manipulation of the silver markets. Ted Butler's talking about it, and if you go to gata.org, you'll see Ted Butler's article today. I'd recommend you go take a read on that, Steve. It's a good read, and anyone else that's interested on how the markets are manipulated. And the reason you want to know how the markets, why the markets, or not why, but the reason you want to know how the markets are manipulated is because once you know how the game is rigged, it allows you to play and win. So yeah, definitely go to gata.org and read Ted Butler's article he's got up there now. APMEX premium on American silvers are the highest these days. Not just APMEX, they're all super high, but APMEX, I was just saying a little while ago, you got your big sellers, the sellers that I always say that I will beat their prices on, which is JM, SD, and APMEX. As a little local guy, I can beat their prices and make myself some money and save you some money, but I don't deal online. But of those three companies, I do notice, and I always go look, one or the other is always cheaper on something than the other guy. So always a good idea to check all of them to see who's got the best price. Again, that's it, considering you can't buy from a local guy and you can't find someone that you can drive an hour or so to go see. Mario says, there's a saying, if you're confused, that means you're thinking, but I'm confused now, Mario. Still wondering if bits is still good for small guys. Forgive me, I'm not quite sure when you say bits. Go ahead and redo that for me. Bits is still good for them. What is bits, sir? You're talking about Bitcoin? I'm not quite sure. If it's Bitcoin, I don't know a lot about it. But anyway, post that again, Mario. And hey, thanks for watching. I got through this, and boy, that's going to take a little while. These are going to be lengthier shows when I start reading comments. I may have to rethink this little comment reading section. You guys let me know what you think. Is it spending too much time? Let me know in the comment section. I'm going to move on to precious metal prices here. It was 1688 this morning here, so it's kind of bopping around 1690. I'm going to do a quick refresh and see if she bounced below that 1690 again. And there she is, kind of what I thought, more monkey hammering in the paper prices. 1682 right now. And like I said, silver's holding its own. Platinum seems to be up a little bit and seems to be holding its own as well. The real monkey hammering is in the gold market. Go figure. I can't figure that out right now. Why gold and not the other two metals so much? Silver seems to be holding its own. Platinum seems to be doing okay as well. But gold seems to be monkey hammered quite a lot, actually, more so than the other metals. But no less, let's look at the range 1680 to 1714. Only temporary, and again, the reason gold is being sold off is because of the treasuries, being at 1.6 or being a little high. And the dollar doing well. And remember, folks, as I've said so many times over the year, that's temporary. Use it to buy the dips, but don't sell into it. Well, that's really about it, I think, and I'm going to leave it at this so I can keep this show under an hour. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 a.m. and 4 p.m. Mondays through Fridays if you got any questions you need to know before you make a purchase, or if you want to know what the best deal of the day is or where to look for spot prices. And don't forget, we also do rare coins and rare paper money as well. A lot of people don't know that, and we have an estate jewelry business. Well, I'm going to let it go. My phone's ringing off the hook, and I'm sure my crew needs me. If anything crazy happens today, I'll do another video. If not, talk to you tomorrow. Hey, thanks for watching. I really appreciate it. And make sure you hit the like and subscribe button if you like what I'm doing. And don't forget to add comments. I'll try to answer them tomorrow. And let me know what you think of the comment section, too. Good day.